Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be with you today as we dive into the latest action on Wall Street. It's been a dynamic start to 2026, with markets showing mixed signals, geopolitical twists, and some exciting moves in individual stocks. Whether you're a long-term investor or just keeping an eye on short-term trends, we've got plenty to unpack, so let's get started. First up, let's talk about the major indexes and how they're shaping the broader market picture. The Dow Jones took a bit of a breather today, slipping just under 1% after recently crossing a historic milestone above 49,000. Meanwhile, the Nasdaq managed to eke out a small gain, up a fraction of a percent, showing resilience in tech-heavy names. The S&P 500, however, couldn't hold its ground, dipping slightly by about 1/3%, despite touching fresh record highs earlier in the session. This mixed performance reflects a tug-of-war between strong economic data and some weaker employment numbers that have investors second-guessing the rally's momentum. For long-term players, this kind of choppiness is just noise. Focus on the bigger trend, which still looks constructive, with historical precedents pointing to strong annual gains after a solid January start. Now, let's zoom out to some of the big-picture economic news driving sentiment. A century-old stock market indicator just flashed a buy signal this week, which is a rare and bullish sign for investors. Analysts are interpreting this as a potential green light for more upside, though it's worth noting that markets are navigating a tricky environment with high valuations and elevated expectations. On the policy front, there's buzz around new executive orders from President Trump targeting defense industry practices, including restrictions on stock buybacks and dividends until certain industry concerns are addressed. This could shake up defense stocks in the near term, so keep an eye on that sector if it's in your portfolio. Additionally, geopolitical events like the U.S. intervention in Venezuela are making waves, though markets have largely shrugged off the news for now, focusing instead on upcoming economic data like the December jobs report. For long-term investors, these macro events are important to monitor, but they often create buying opportunities during overreactions. Shifting gears to the day's biggest movers, let's check out the large-cap gainers lighting up the boards. Intel stole the show with a solid jump of over 6%, riding a wave of optimism around its latest product bets in mobile gaming. Cybersecurity names like Palo Alto Networks and CrowdStrike also flexed their muscles, each climbing more than 4%, signaling continued strength in tech demand. Healthcare wasn't left behind, with heavyweights like AbbVie and Regeneron posting impressive gains as well. These moves highlight pockets of opportunity, especially in tech and health, where innovation continues to drive growth. For long-term investors, these names could be worth a deeper look if you're underweight in these resilient sectors. On the flip side, not everyone had a great day. Among the large-cap losers, Caterpillar took a hit, dropping over 4%, despite exciting news about partnering with NVIDIA on AI-powered construction equipment. Defense stocks like Lockheed Martin and Northrop Grumman also stumbled, each down around 5%, likely tied to the policy noise around buybacks and dividends I mentioned earlier. Blackstone and Apollo Global Management in the financial space saw similar declines, reflecting some broader sector weakness. While these short-term dips might sting, they could be entry points for patient investors who believe in the underlying fundamentals of these giants. Speaking of giants, let's take a quick peek at the market movers by volume. NVIDIA continues to dominate trading activity, holding steady with a modest 1% gain as it remains a focal point for AI-driven narratives, though news of China pausing orders for certain chips raises some eyebrows. Intel, as I mentioned, was a standout with heavy trading on its big move up. Tesla, however, saw a slight dip despite high volume as investors weigh its competitive landscape in the EV space. These names are often the heartbeat of market sentiment, and for long-term holders, their volatility can be a chance to average down or up depending on your strategy. Sticking with volume, some other actively traded stocks caught my eye today. American Airlines climbed a couple of percent as it celebrates a milestone partnership, while Open Door Technologies took a sharp 11% hit, possibly on real estate sector concerns. Beyond Meat saw a surprising pop of over 11%, despite ongoing challenges, showing how speculative fervor can still drive certain names. These high-volume plays are often more speculative, so tread carefully, but they can offer clues about where retail investor interest is flowing. Looking at the past week's performance, some large-cap stocks have been on fire. SanDisk led the charge with a staggering 43% surge, fueled by soaring memory demand tied to AI workloads. Western Digital and Seagate Technology also racked up impressive double-digit gains, reinforcing the strength in data storage. Micron Technology and Lam Research rounded out the top performers, each up over 16%, showing how the semiconductor space is heating up. For long-term investors, this sector's momentum could signal a multi-year trend worth riding, especially as AI adoption accelerates. On the other end of the spectrum, some large caps struggled over the past week. Credo Technology dropped over 10%, reflecting some cooling in tech enthusiasm for certain names. AppLovin also saw a nearly 10% pullback despite strong platform adoption news, possibly due to profit-taking. HDFC Bank and American International Group weren't spared, each down around 8 to 9%, hinting at broader financial sector softness. These weekly declines might spook short-term traders, but for long-term folks, they could be a chance to scoop up quality at a discount. Now let's pivot to what's on the horizon with this week's earnings calendar. It's a packed slate with some heavy hitters reporting. Constellation Brands is up today, and investors are keenly watching guidance amidst shifting consumer trends. Later in the week, Delta Airlines will give us a read on travel demand, while TD SYNNEX could offer insights into tech distribution trends. These reports can set the tone for their respective sectors, so long-term investors should note how management commentary aligns with broader economic conditions. If you're positioned in these names, volatility could create opportunities to adjust your holdings.
Exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Before we wrap up, let's touch on sector performance over the past week. Basic materials and industrials led the pack, each up nearly 3%, likely buoyed by optimism around infrastructure and commodity demand. Consumer cyclical and technology sectors also showed strength, gaining around 2% each, reflecting robust consumer and tech spending. These trends are worth monitoring for long-term sector rotation strategies, especially if you're looking to diversify your portfolio. On the weaker side, energy took a hit, down nearly 1% over the week, pressured by oversupply concerns and geopolitical factors like Venezuela's potential output ramp-up. Financial services and consumer defensive sectors also lagged, showing slight declines. While these short-term moves might not alter a long-term thesis, they're a reminder to reassess sector allocations if macro conditions shift. As we close out, a quick note on the broader market outlook for 2026. Analysts are split, with some wildly bullish forecasts for the S&P 500 reaching as high as 10,000, while others caution about overvaluation and potential pullbacks. The AI revolution continues to be a key driver, but sticky inflation and policy uncertainties remain risks to watch. For long-term investors, staying diversified and focusing on quality companies with strong cash flows is the name of the game, regardless of short-term noise.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends. and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.